In Q1 2022, Warren Buffett started buying Occidental Petroleum, which is one of the largest oil and gas companies in the United States. Despite the company being up over 600% from its lows in 2020, Warren has not stopped buying, and Berkshire Hathaway now owns over 20% of the entire company. In today's video, I'm going to show you exactly why Warren Buffett is buying as many shares of Occidental Petroleum as he can. Warren has said he started buying Occidental after he read the Q4 2021 earnings transcript. I took a read through the transcript and I believe I found why he was so attracted to the company. So right here, this is the first screenshot, and this says, with respect to the cash flow priorities, our priorities for 2022 remain largely unchanged, with a continuing emphasis on reducing debt while maintaining our asset base integrity and sustainability. So basically, the company's number one priority for the year of 2022 remains largely unchanged, with the company reducing its debt. So the company's number one priority is reducing the debt and deleveraging the balance sheet to make it more financially sound. Then further down they say, we believe establishing a framework for returning capital to shareholders through a sustainable common dividend combined with an active share repurchase program and continued debt reduction creates an attractive value proposition for shareholders while also improving the company's long-term financial position. Basically, the way that they want to return capital to shareholders is through a common dividend and buying back shares. But before they increase the dividend massively and really buy back a lot of shares, what their number one priority is reducing debt. And remember, this is the Q4 2021 earnings transcript. So this is what the company was saying they were going to do this year in 2022. And I believe this is why Warren Buffett bought as many shares as he could. Now, down here at the very bottom, it says, at the point where it is appropriate to invest in future cash flow growth, we will only do so if supported by long-term demand. So basically the company is saying that they're not going to invest their cash flow, or they're not going to invest their current cash flow into future cash flow growth unless they believe it is supported by long-term demand in oil and they can actually get long-term demand out of those new assets that they invest in. Now, I have a second screenshot here that's from the Q4 earnings transcript as well, and this says, the long-term sustainability of our dividend will be enhanced by continued deleveraging and share repurchases. And then further on it says, as debt is retired, our cash interest payments will decrease, freeing up cash that can be used to support future common dividend growth. So basically, they want to make sure that their dividend is sustainable over the long term and that they can continue deleveraging the business and doing share buybacks. And also they're saying that as their debt is retired, their cash interest payments will decrease, which will give the company more actual free cash flow to increase the dividend further or buy back more shares. That is why the company's number one plan right now is to reduce the debt on the balance sheet so that they can significantly lower their interest payments, which will allow for the company to maintain and grow a sustainable dividend over the long term. Then it says maintaining an active share repurchase program with the benefit of a healthy balance sheet will potentially enable us to grow the dividend per share basis at a faster rate. Now, what they're saying here is that through active share buybacks, they will actually be able to increase the dividend at a faster rate. This is because, think about it, dividends are paid on a per share basis. Like whenever you talk about a dividend, right now, I believe Occidental pays a 52 cents per share dividend. So if the company can buy back shares and reduce their overall share count, then they're actually reducing the net amount of dividends that the company pays out to shareholders while leaving the dividend per share the same. Because think about it, there is now less shares that they need to pay out dividends to. So by reducing the share count, the company is reducing the amount of dividends they pay in net dollar amounts, which means that they can then increase the dividend. This is what companies like Microsoft actually do. Microsoft buys back shares consistently so that they can increase their dividend per share at a faster rate than they could have otherwise. It's funny, repurchasing shares and buying back shares, taking them off the stock market can actually boost dividend income growth. So that is what Occidental is saying here, and this is kind of their plan over the long term to continue growing the dividend. Then it says, debt retirement remains a higher cash flow priority than our share repurchase program. So very clearly, they were saying at the end of 2021 that reducing the debt is the company's number one focus over buying back shares and over paying out a massive dividend. Just reducing the debt, cleaning up the balance sheet, and putting themselves in a healthier financial position is the number one priority for the full year of 2022, okay? Then it says, it is our goal to reward shareholders with a triple benefit of a sustainable common dividend, an active share repurchase program, and a continuously strengthening financial position. That is what the company wants to do. And after Warren Buffett read this exact transcript, he started buying as much Occidental Petroleum shares as he possibly could. Again, even though the stock is already up like 4 to 5 to 600%, he didn't care. He literally is just buying as much of this stock as he possibly could. What we're going to do now is head over to Occidental Petroleum's financials here on Stock Unlock, and we're going to head over to the balance sheet. And I want to show you all what is going on with the company's liabilities. Because right here in the third quarter of 2019, Occidental Petroleum had about $90 billion of long-term debt, or sorry, liabilities. $90 billion of liabilities, okay? Now by the second quarter of 2022, about 3 years later, they have about $46 billion of liabilities. So they have dropped their total liabilities by about $44 billion in the last about 3 years, essentially, basically 3 years. They are putting basically all of the cash flow into just reducing debt and reducing the company's liabilities, which is exactly what the company said that they were going to do in their Q4 2021 conference call and on their transcript. So the CEO and the management is sticking to their word, and they're sticking to their capital plans, and clearly Warren Buffett likes these capital plans. Now, let's head over to the company's cash flow statement. Let's take a look at their cash from operating activities, and we're going to zoom all the way out to 2002 here, because right now, Occidental Petroleum is producing a record amount of cash flow. This is the operating cash flow, and in the second quarter alone, they produced $5.3 billion of operating cash flow. In the trailing 12 months, the company is also producing a record amount of cash flow, with about $15 billion of operating cash flow produced. They've literally never produced this much operating cash flow. Now, if we scroll down, we can see that this is the exact same story for the company's free cash flow. In the trailing 12 months, they have produced about $11.4 billion in free cash flow. And in the most recent quarter, they produced about $4.4 billion in free cash flow. This is a tremendous amount of free cash flow that the company is producing right now. And this is because oil prices are so dang high. And while the oil prices are high, Occidental Petroleum's management is taking advantage of that and reducing the company's long-term debt and liabilities while they're generating so much cash so that the business can be in a strong financial position. Now, also here on the cash flow statement, we can very clearly see that in the trailing 12 months, the company has repaid about $13.8 billion of debt right here. You can see debt repayments, negative $13.8 billion. And if we take a look at net common stock issued, it's negative $440 million. So they've bought back $440 million worth of shares over the past year. And the dividends paid have only been about $1 billion. So the dividends paid and the net common stock issued, or the share buybacks together, is about $1.3 to $1.4 billion, which is like a tenth of the debt repayments they have done over the past year. So you can very clearly see right here on the cash flow statement as well that the company's free cash flow is basically all going to cleaning up the balance sheet, deleveraging the business, and paying back debts. You can very clearly see that in the numbers here, and it's backing up what the management said on their Q4 transcript. Now, also what's interesting is if we head over to Stock Unlock's dividends tab right here, we can, and if we just scroll down really quick, we can see that back in 2019, or really, sorry, in 2020, Occidental Petroleum was paying a dividend of $3.15 a share. Then the dividend, they basically cut it all the way down to only 4 cents a share by the second quarter of 2021. Basically what the company did is they just cut their dividend out. They were paying out a $3 per share, an over $3 per share dividend in 2020. And then over the next year, they cut it down to 4 cents. What the company is very clearly doing is literally they cut their dividend so that they can just focus on deleveraging the business and cleaning up the balance sheet. They're not paying out those billions of dollars, multi-billion dollars in dividends anymore. They cut that, and now they're focusing 100% basically on cleaning up the balance sheet. And it's very clear to me that this is what Warren Buffett wants. He wants this company to make sure that they are in a long-term, healthy financial position and in a place where they can focus now on cleaning up the balance sheet so that over the long term, they can reward shareholders with a very nice dividend, buying back shares and growing the dividend again over the long term. Now, what we're going to do is head over to Stock Unlock's freeform tool, and we're going to go and take a look at Occidental Petroleum's free cash flow yield. Now, the reason we're going to take a look at the free cash flow yield is because Warren Buffett says that the number one question that investors should ask themselves is how much cash can this business return to me, and by when? Basically, whenever he takes a look at a new investment, he is always asking, the number one question in his brain is, how much cash can this business return to me? How sure am I of that? And how long can they return this much cash to me? Well, when you take a look at the business's free cash flow yield, this essentially answers Warren Buffett's question of how much cash can this business return to me. And right now, Occidental Petroleum's free cash flow yield is sitting at 18.6%. That is an incredibly high free cash flow yield. And what this means is that if Occidental Petroleum wanted to, they could take 100% of the 100% of the company's free cash flow and use all of that, if they wanted to, and pay out a nearly 19% dividend right now, even though the stock is up like 600% over the past 2 years. That is how much cash this business is producing right now. You just don't really see it in the company's dividend yield right now because they cut the dividend to pay back their liabilities. I mean, go back over here on Stock Unlock, and we can see that the dividend yield right now is below 1%. So personally, I think that a lot of investors are looking at this dividend yield right here, and they may be like, you know what, this company isn't even generating a 1% dividend right now, so it maybe isn't that attractive. But when you take a look under the hood of this business, it's actually generating an over 18% free cash flow yield. And instead of paying out that money, they're just cleaning up the balance sheet with it instead. And then eventually they're going to start buying back shares and increasing the dividend once again in the future. Warren Buffett sees this, and he knows that this company has a free cash flow yield of nearly 19% right now. And I think that's the number he's focusing on. If we also take a look at this business's price to operating cash flow and we zoom out to 2012, we can see that its average price to operating cash flow over the past decade has been about 7.5, okay? Right now, it's selling for a price to operating cash flow of about 4.1, while oil prices are spiking, and while this business is literally producing a record amount of revenue, a record amount of operating cash flow, and a record amount of free cash flow, and its price ratios are selling like 30 to 40% below its historical averages. So the business's fundamentals are sitting at an all-time high, essentially, and the price for this business is sitting well below its historical averages. And it has now an 18% free cash flow yield, and it's setting itself up for long-term success. So in my opinion, it's very, very clear why Warren Buffett is buying this business, because it's just an absolute cash flow machine. It's not expensive, and the management looks like they are really setting the business up for long-term shareholder returns. What's interesting about this is that this is an oil and gas company, and oil is typically a cyclical sector. It goes through like these boom and bust phases. And what's interesting is Warren Buffett is buying Occidental Petroleum while a lot of people think that we're at like the top of the oil cycle. I mean, oil prices are incredibly high right now, and oil stocks are up like 600% over the past 2 years. So the typical investor is looking at this right now and saying, well, this is actually the time you should be selling oil companies because, you know, we're at the top of the cycle is probably going to turn, oil prices are going to come down, and these businesses' profits are going to come down with the price of oil. And it looks like Warren Buffett really he's not really too focused on what oil prices are going to do over the short term. Warren Buffett is known for being a very long-term investor. Like, he says the best holding period is forever, and when he buys a stock, he wants to own it for literally decades. What that ultimately means is I think Warren Buffett is buying Occidental Petroleum and not focusing on the cyclical price of oil. What he's focusing on is the management team and the long-term potential of this business and how much cash this business could produce over the next 10, 20, 30 plus years. I don't think that he's focusing on whether oil prices are going to be higher or lower over the next year, 2 years, 3 years, 5 years. He is literally thinking in terms of decades here. And I think that he sees a really strong management team that is focused on creating shareholder value and focused on setting this business up to prosper and benefit over the next decades by cleaning up the balance sheet while they're generating so much cash right now. Personally, I don't think that Warren Buffett is buying Occidental Petroleum as a short-term play on what oil prices are going to do, or as some sort of proxy that he thinks oil prices are going to continue rising. To put it simply, I don't think that Warren Buffett is speculating on what the price of oil is going to do over the short term. I think that he is investing over the long term in a business that he really likes, with a management team that is really solid, and in a business that is really cleaning up its balance sheet to benefit and prosper over the next decades to come. Yeah, and I think that he believes that this business is taking all of the right and necessary steps to create tremendous shareholder value over the long term. I mean, as we saw, Occidental Petroleum cut their dividend in 2021, it looks like, so that they could focus on deleveraging the balance sheet. A lot of investors probably view this as a negative thing because typically when a business cuts its dividend, the market doesn't like that. The market sells off a business typically, again, when they cut their dividend. Warren Buffett doesn't seem to care. He thinks that that was the right move. He thinks deleveraging the balance sheet is the right move. And then over the long term, once the business is deleveraged, then reinstate that high dividend and start growing it. I think he really resonates with this capital allocation plan, and that's why he is buying as much as he possibly can in Occidental Petroleum. That's my opinion. That's my perspective on Warren Buffett's investment in Occidental Petroleum. And as always, let me know what you guys think down in the comment section below. Also, if you are interested in the stock analysis platform that we use here on the Stock Unlock channel, well, hey, this is Stock Unlock, www.stockunlock.com. You guys can come and get a 14-day free trial. You do not need a credit card or anything like that. Just enter in your email and you can get access to our stock analysis and educational platform that we use here on the channel. It is incredible. It is the best platform for investors, and honestly, just go and check it out. Use that 14-day free link, free trial link at the top of the description, and let us know what you think. Also, again, if you did enjoy this video, please remember to leave a like on it. And if you want to see more stock market related content like this, that is focused on fundamentals and not focused on hype, and we're also really focused on educating you and teaching you about long-term fundamental investing, so that you can build your wealth, then please subscribe to the channel, because that is what we are all about here. But that's going to wrap up the video, everyone. So thank you all again so much for watching. Make sure you check out Stock Unlock, and I really hope to see you all again in our next video.